Welcome everybody to the Inside View Real Estate Podcast, and today we're going to be talking about the 2021 market forecast. Good morning everybody, and welcome to the Inside View Real Estate Podcast. I'm one of your hosts, Josh Zuniga.
I'm the other one, Carl Freund.
And we are excited to bring you this new podcast. It's something we've been working on for what? A few months now?
Yeah, conservatively a few months.
Yeah, absolutely. Yeah, we Carl and I always like to throw around quite a bit of ideas, and then it's always beautiful to want to see it come right into play. And here we are, right?
We're just busy dudes, man. We got a lot of stuff going on.
Yeah, absolutely. And obviously, one of the ideas that we had was we wanted to create a short form podcast where you can get your information and get all of your value and all of your content inside of 15 to 20 minutes, correct?
Yeah, quick, fast, easy.
Exactly,
Yes.
because you're a busy guy.
You're a busy guy.
I'm a busy guy, and we don't have an hour to just be listening to a podcast and get
These
that.
are busy people.
Yeah, and get that nugget at 26 minutes, right?
Yep, let's get it.
Exactly. All right. So the first topic we want to get right into, and we want to talk about it today, is the forecast for 2021. What an exciting year 2020 was, right?
It was a shit show, buddy.
Yeah. Probably one of the busiest years any real estate agent, has had. If you
Or you use COVID as an excuse and you didn't do any production.
tell me, just you and I can go back and forth on it. What do you see, or what did you see as far as 2020?
Well, we
and
started
how the
strong,
market went?
right?
Absolutely, yeah.
And that was kind of a normal market. Like if you look back at January of 2020, everybody was like, 2020 is my year. And then 3 months later, it just blew up. But in January 2020, it was generally a more balanced market. Like there was inventory. We had a little bit of selection. It wasn't like, we were still doing multiple offers. Like if you had a listing, you had probably, maybe 3 offers in a weekend, but now it's like 30 offers in a weekend.
Yeah.
But in that first 2 or 3 month period, pretty normal. Then March 15th, March 10th came around.
That's the exact day? Yeah.
And life on earth changed substantially.
Completely.
And so literally, I don't know about you, but literally every escrow that I had blew up. I had 8 deals in escrow. Literally every single one of them canceled. And it was for quote unquote inspection.
Yeah, I had two. I had 2 that fell out literally the next day. And I was waiting for about 10 phone calls to happen, but thankfully only 2 actually decided to bow out because, of what their job security may have been.
Yeah, I think you just got lucky.
And 6 months in. I feel like I'm probably very, very lucky. You said you had 8?
I think I had 8 fall out in
8
1
fall
week.
out.
And
Yeah.
you're on suicide watch, right?
Yeah.
Legitimately.
Yeah.
After Congress kind of got their shit together and they said, wait a minute, we need to do some real strong economic stimulus to keep the train moving in the right direction, they artificially pushed rates lower and they gave confidence to the market and said, hey, look, we're going to make money very, very cheap for as long as it takes, for however long that is. And we didn't know at the time, right? And so when interest rates at the bank level, at the macroeconomic level, are 0 essentially, and you have free money, the cost to borrow comes down substantially in consumer credit, right? And that includes mortgages. So you could say something like, as the mortgage rates came down, there was this sense of urgency that we should probably, jump in the real estate market because the real estate market is going to get hot.
Yep.
That caused an artificial demand that put strain and caused a really strong seller's market, right? And so what was really interesting for me is I pulled the stats for December 2020 because I was kind of interested to see year over year, what does December 2019 look like versus 2020? And in the Phoenix metro area, we actually sold 10,000 units. It was 9,980 some odd units, right? And so that's a lot of units. It's up 20% from what it was in 2019. So yes, there's an artificially low inventory because I think demand is there, right?
Absolutely.
But what you're seeing is the velocity of the market is increasing, meaning that we're actually selling more units. So people are thinking, well, there's no inventory, houses aren't getting sold. That's not the case. So what happens is a house gets listed on Thursday, people start showing it on Friday. By Saturday, they're writing offers, and by Sunday, you've got 20 offers in your inbox, right? And then it pops, goes pending status very, very quickly. So you see the actual velocity of the market is increasing substantially. It doesn't mean that the house that you're looking for isn't available. It just means you need to pull the trigger when you're ready. You see it, you got to pull the trigger.
Absolutely.
Yeah, so people are complaining, oh, there's no houses. There are. There's actually a lot more new listings than there were a year ago, which is shocking. So, if you're complaining about not being able to find a house, set yourself up on some sort of instant search. And please don't use fucking Zillow, by the way. Zillow is literally the worst tool in the world.
Zillow, trust me.
And
Yeah.
it's a personal vendetta against Zillow. I mean, they have a great product, and I'm not discounting the value that Zillow brings. I just hate them. That's just me. But Zillow's IDX feed right now they became a brokerage recently, right?
Absolutely.
But up until now, they relied on a different type of API or a different type of RETS feed to actually get the data from our MLS into Zillow, and then it took a while to propagate that. So if you guys are looking, for homes, find a website that has a direct link to the IDX. Pretty soon they're going to be using APIs. Now I'm getting nerdy, but you got to find access to information instantly. Call Josh Zuniga and have him set you up on an instant alert inside of Flex MLS, and be the first on the scene, like be an ambulance chaser. So as soon as you see that thing hit the market, Josh sends out that email, bam, you're in the car and you're showing property.
Well, here we go, ladies and gentlemen. This is why we have Carl as one of the hosts. He loves to geek out and he loves all the stats, and we're always happy to have him. But even just like with this, some of the stats that I saw for the overall market, just with Maricopa County, we saw a 19% appreciation rate.
Yeah, not
overall.
Sustainable.
Yeah, that is insane. So I even looked it up. The national average, year over year is anywhere from between 4 to 6%. Phoenix has done well, and they're usually anywhere from like 7 to 9.
But why is that? Why is that?
I have a few stats. You tell me a couple of yours. Make them short.
Just kind of put my 2 cents in there.
Yeah.
You see what's happening politically in states like California, Washington, Oregon. And California came out and said, hey, look, we're going to put, basically a high net worth tax on people. And what happens? All the high net worth individuals move out of California and they immigrate to places like Nevada. Look at like Graham Stephan, Meet Kevin, all those guys going to Texas, Elon Musk.
Yep.
So there's a mass exodus from California, from Oregon, from Washington State to Phoenix. And I think that's why Phoenix particularly, because we're so business friendly and tax friendly, is that we're seeing that unnatural growth, right? We're seeing artificial growth. And so like other markets that we operate in, like we have an office in Miami, we're not seeing that appreciation. And so I didn't mean to cut you off, but yeah, you see 19% over year. Is that sustainable? I don't know. And then I had a really interesting point from one of my investors who actually lives in Singapore, so he's got a really distant view of this, right? And he owns properties in New York and California and Sedona and Arizona. And he said, hey, look, my apartment in Manhattan is like $2 million. And then my apartment in Scottsdale, Arizona, which I'm looking at right now, by the way, across the street, it's like $500,000 for the same square footage. So there's still a lot of room for growth. But understanding that 19% year over year, in my mind, and maybe I'm just a conservative person, isn't really sustainable for the long term. Maybe it is, I don't know. I mean, what are your thoughts?
Just in 2020 alone, I had 4 clients move from Chicago here and bought several properties, obviously for their investments, and now they're actually going to be here full time, which is pretty exciting. So anybody coming from, the Northwest or California or Chicago, feel free to come join us. We're happy to have you here and service you in any way, shape, or form here as well. And but I know you were talking about how we're going over asking price. So there's another stat that we got from the Crawford report. Just in December alone, 33% of all transactions went over asking price.
Can we qualify asking price for 2 seconds?
Okay.
And let me drop a little bit of knowledge on real estate agents, right? And so I've got several listings, right? And I always get offers at asking price. Asking price doesn't mean market value. What if my asking price is $1? Are you going to offer me $1? No.
No, absolutely not.
No, you're going to go out and you're going to run comps, and you're going to figure out what the thing's going to appraise for, and you're going to figure out what is worth to you as an investor or as an owner-occupied buyer, and then you're going to make an offer based on those numbers. Asking price has very little to do with market value. Mm-hmm. And if you're a buyer in this market and you're listening to this podcast right now, I need you to understand that legitimately, asking price is a relative price. It's a target. It doesn't mean it needs to get hit every single time. Doesn't mean you need to offer over asking every single time, but you need to run comps and figure out what the intrinsic value of that property is to you, and if it makes sense, then pull the trigger, right? And so every property has value too. What if the asking price is $10 million on a $100,000 property, and what if you offer $90,000 and they take it, right? Yep. Everybody wins.
It's a win-win for
it's a
everybody,
win-win, and so understand logistically like where you need to be in terms of offer price.
Coming in this situation, you're saying that obviously like inventory, like the inventory is there, even though there's a stat that we showed from the Crawford report saying that we're down 70% as far as our supply.
Yeah, but it's a misleading stat.
So if you're a seller, this market is looking really, really good. It's looking really, really hot. If you're in the market to sell, I would strongly say, suggest it. But obviously everybody's kind of a little weary. We don't know if the world's going to fall apart with everything that's going on, especially at the Capitol, what's going on with the presidency. We don't know exactly, but a lot of individuals I see are just staying put. And if you're on a buy side, definitely you need to come in knowing that you're going to be in competition with a lot of other buyers. Interest rates are still historically low.
It's the lowest it's going to get.
Yeah, so exactly like you're saying, it's free money. You know, I remember just in 2019, I got an interest rate of 4.65.
And you're high-fiving.
Right.
Yeah.
And I was excited about that. Yep. You know what I mean? Because I remember in 2016, they were just giving 3.5s, and then we're on the uptick. And now we're below, what, 2.8? Is it 2.8?
Yeah, it's like 2.8 or 2.75 for a 30-year fixed rate now with no points. And you got to understand that as interest rates go down, the affordability index goes up. And so what happens is an inverse relationship. So what you can do is you can afford more. Well, what does that do? You're saying, well, okay, instead of $1,500 for a $300,000 house, maybe it would be $1,500 for a $350,000 house. Yeah. That's what we're seeing is that appreciation level because artificial, low interest rates are pushing that value up.
Even with this, like tell us about what do you feel are some of the bigger pool of buyers that are actually coming in this market. So I know just being myself is a lot of millennials. Yeah. Millennials, even like Gen Z, are really driving this market as far as first-time home buyers because now they see the ability and the affordability to actually purchase their home. They've probably been in their job maybe 3, 4, 5 years.
Got decent credit.
Yeah, got decent credit, or they've been working on it, so now they actually know. They have a little bit for their down payment, and they're coming into the actual marketplace, to buy their first homes. Mm-hmm. Would you agree?
I would 100% agree. Yeah. And they grew up in a time period in 2008 where they were exposed to their parents losing their house. Yeah. So they're artificially gun shy, and so they're saying, well, wait a minute, I saw what happened when my parents bought the house. We lost all that, and so it takes a little bit of training to get that out. That you get that mindset out.
Yeah. So just a little takeaway, guys. If you're looking to sell, I would say that demand is definitely going to be there. Would you agree?
100%. Yeah. For the short term.
Now,
we don't know how this is going to look on a macroeconomic level in the next 6 months. And reminder that the real estate market is a big ship, right? It takes a little bit of time to turn. So you'll see economic indicators leading an economic downturn, right? Like you'll see demand start to artificially fall off, or you'll see the velocity of the market slow down before everybody starts to, raise alarms.
If you're a buyer, I would always say, be ready. It's definitely going to be a very competitive market, and I would say patience is probably going to be one of the biggest things in this game that you're going to want to have. Trust me, I've walked with several clients. We go see anywhere from like 10 to maybe 20 homes depending, and we might make one offer. It might get accepted. Awesome. If it does, we keep moving on. If it gets rejected or we get outbeat by another individual, you just got to stay focused, got to stay on the game plan, and eventually one of those houses is going to be ours. So seller, looking to sell, definitely go for it. If you're looking to buy, just stay patient, stay competitive, and we're more than happy to help you on any of those fronts. But you mentioned a little bit, about some key indicators, about some changes in the market. We are going to talk about that on our next episode, episode 2. What are some signs to look out for a 2021 potential market crash?
Yes, sir.
I know he's excited about that. I'm excited. All right, so we'll see you guys next week. If you have any questions, feel free to reach out to us on any of our social profiles. We're happy to talk to you and speak with you on any point.
All right, buddy.
All right, bud. Thank you. Thank you, guys.